On this video today on due diligence, you're going to learn how to do your homework on a commercial property, how to reduce your risk, and lastly, how to avert disaster when buying a commercial property. So that you know what you're investing into, okay? Number two, what risks you're facing, because every commercial property has a risk, right? And number three, at the end of your due diligence period, you're only buying the best properties. You're only buying good properties. So in this video, I'm going to share with you 6 tips that most people don't even think about. And these tips will save you thousands of dollars and allow you to sleep at night knowing you made the best decision. Let's get started. I'd like to start right here. We're breaking down what the three main parts of due diligence, okay? Doing your homework on a commercial property, there's 3 main parts that we're going to focus on, and or that you should focus on, and they are physical, financial, and legal. And in them, for your physical, you have inspections. You're going to do your market research, and then over on the financial side, you're going to examine the profit and loss statements for the property. You're going to take a look at leases, and then on legal, things like title and survey and how the property is used. Okay. Now, I have an extensive video on this, and the video link will appear on the screen. It's called How to Inspect an Apartment Building. That link will appear on the screen where I go over this extensively. So in this video, what I want to focus on is in each of these 3 parts, there are some things that people never think about, and that's what I want to do right now. So let's do that next. All right, here are the 6 things for due diligence that most people don't even think about. And for those of you that are seasoned, you may know this, but for beginning commercial real estate investors, I want you to pay attention very closely. All right, so again, the 3 sections, physical, financial, legal, those are the 3 main parts. And for the physical, one thing I want you to watch out for that people normally don't do, there's a website called walkscore.com, okay? Transit score, bike score, and what it does, it allows you to analyze the walkability, busability, and bikeability of your apartment building's location. It is so important now because many people work remote, and being able to walk someplace, bike someplace, or catch a bus or train someplace to get around is really important. Okay, so this is maybe it's a relatively new website that's going to be bought out pretty soon. They can make a bunch of money, but it's a very popular website. So that's one thing I want you to do. For every deal that you do, go to WalkScore, put in the address, and it will rate your walkability, bikeability, and busability of your location. Okay? All right. Number 2 is having a lack of cell phone signal inside the building. Yes, who would have thought about that? Well, it happened. Okay, so one of our students were doing an inspection, and he couldn't call me until he went down the block. So that is not going to work as a long-term solution for getting people to want to rent your building and they can't call out or do work inside or anything like that. So again, this is something most people don't think about. So make sure that you have a strong cell phone signal, not a Wi-Fi signal, cell phone signal inside the building. This building I'm referring to virtually had none. You had to walk down the street. Not good. All right. Now let's move over to the financial side of the 3rd and 4th tip. Number 1 is the property tax increase upon closing, right? Let me talk about that for a second. When you purchase a commercial property, let's say the seller owned it and he bought it for this much, and then you come along 10 years later, you purchase it for this much. The tax assessor for that city or that county is going to raise their property taxes. So part of your due diligence is to know that when you buy at this level, what is the new property tax going to be? It's going to be much higher. It could be a deal killer, right? In Illinois, this happens quite a bit, right? So I want you to be very cautious on calculating what the new property taxes will be. Most real estate agents or investors, when they send you that information that you want on income and expenses, they're not including what your new property tax is going to be, and it could be through the roof. So check it out. The other thing on that is on the property taxes, when they get reassessed for the higher level, you can also contest them. Okay? So not only know how to calculate what the new property tax would be, but understand the contesting procedure. Everything's online, how to contest your raise in property taxes. Myself included in our students, we have probably an 85% success rate of getting their property taxes back down once they get increased. Okay? Recently, one student told me it was increased 400%. 400, and we're going to battle it. I guarantee you we're going to get it back down to something reasonable. Okay? So make sure you understand that. Okay. Number 4 is to stress test your net operating income and cash flow for unforeseen expenses and maybe a potential economic downturn. Back in the good old days, a few years ago, we had rising rents. We didn't have to worry about this almost, right? But those days are over. Rents are not going up like this. They're going up like this now. They're going up, but very small increments now. So your ability to stress test your deal. We do that for our students. Our students send us a deal. We will stress test it by increasing the occupancy, by increasing expenses, putting what-if scenarios into their deal to make sure that they can withstand an unforeseen expense, okay? Property expense or an economic downturn. Gone are the good old days, so now you really have to know what you're doing and be a good operator, okay? Something we focus on our company all the time. All right, okay, that was physical, this financial. Now legal, this is really important. The issue is, are you zoned residential or commercial, okay? Now I'm going to speak for an apartment building owner or investor only, okay? So let's say you have a 10-unit apartment building and it is zoned commercial, okay? Pretty typical, right? Now, here's the issue, potential issue. It could be a huge issue. On your 10-unit apartment building, if it burns down, okay, and is zoned commercial, will the city allow you to rebuild an apartment building which is residential, okay? In most cases, no, right? So most cases, answer is no. They will not allow you to build a residential building, an apartment building, right, in an area that's zoned commercial. So you have to be very careful in knowing how the building is zoned, right? And then if it burns down, what can you rebuild? Most people don't look at that. They assume it's an apartment building or it's this and that. If it burns down, I can rebuild it. Sometimes the answer is no, because the city has changed things around the city and you're in that change and you may not be grandfathered in, okay? Again, these are things people don't normally think about, but we do because we're in it every single day. All right. Lastly, number 2 for legal, is the income of the property subsidized? I'm not referring to Section 8, okay? Is it subsidized through maybe a tax credit program known as we call this LIHTC. It's a low income tax housing credit where the developer or the purchaser of the building, the government gives them tax credits if they keep the income at a certain level, low, okay? Or there's another program called Section 42. So if you're looking at a deal and you're in due diligence and you see tax credit or LIHTC anywhere, Section 42, beware, because in those programs where your income is subsidized because they gave you tax credits, you cannot get your rents way up to market levels as fast as you can if you are not part of that program. Okay, so if you're in the middle of your due diligence and you feel your one bedrooms can go from 1,000 to 1,500, in a normal situation, yes. But if you're under a subsidized program, like a tax credit program of any type, you most likely can't get to that level. So again, these are things people don't even think about. So if you're in a tax credit tax credit property, LIHTC or Section 42, okay, type of property, you need to check those things out. Ask for the documents and really understand the program, because if you think you're going to raise the rents and do a cash out refi, make a bunch of money, that's not happening in those type of programs right away. All right? Okay. All right, everyone. So there you are. Okay? I just explained to you 6 tips that people normally don't think about. So I hope you learned something from this. All right. Thanks, everyone. So if you want to learn more about how we work with our students, go ahead and apply to our Protege program. The link will appear on the screen. But if you just want to learn more, we have a book. It's one of our best sellers, It's Commercial Real Estate for Beginners. The link will appear on the screen. No obligation. Click on it, read it, go at it. And lastly, if you like this video, go ahead and like it. And also, too, if you want more of these videos, go ahead and click the subscribe button, and you can be part of what we do here for our students. Thank you, everyone, for hanging out with me today. I enjoyed having you. I'll see you at the next video.